Hi guys, this is Sia Jane and welcome back to my YouTube channel ACCA and beyond. So let's continue with our FR series, and today's chapter is chapter number 4, Impairment of Assets. Okay, so quickly let's start. First of all, the IAS 36, which is about impairment of assets, applies to all assets other than inventories, construction contracts, deferred tax assets, assets rising from employee benefits, because this will be covered in your SBR. Your financial assets included within the scope of IFRS 9, investment property measured at fair value, and non current assets classified for held for sale. Because all of these assets have their separate IAS or IFRS standards. So you do not apply IAS 36 on these assets, because we are going to study almost all of these IAS and IFRS individually, except for this one because this is included in your SBR syllabus. So, what is the object of IAS 36? The objective is to set rules to ensure that the assets of an entity are carried at no more than their recoverable amount. Um, so it's just that we do not want to overstate our assets. That's the objective of our IAS 36. So, in order to not overstate our assets, we have to impair them. Bring down to its original value. Maybe you purchased an asset for 50,000 in 2023, but right now in 2026, because we have used that asset, or maybe some damage has happened to it, the value is not the same. Like it's not 50,000, it's 40,000. So that is called as your impairment. An asset is impaired if its recoverable amount is below than the value currently shown in the statement of financial position. So maybe in your uh, balance sheet, your asset is priced at 50,000, but if you try and sell it in the market, you will only receive 40,000. So 50,000 is not the value of your asset, 40,000 is the value of your asset. So it should be recognized at 40,000 in your balance sheet also. So how do we find out the recoverable amount? The recoverable amount is taken as the higher of. Okay, focus on higher of, because even I used to get confused between a higher or lower. So it's important to remember it's higher of. Okay. This highlighter is very dark. Okay. So recoverable amount is taken at the higher of fair value less cost to sale, that is your NRV, your net realizable value, and the value in use. So what I guess we are going to discuss. Yeah, we are going to discuss both of these over here. So um, an impairment exists if the carrying amount is greater than your recoverable amount, or greater of fair value of which is your recoverable amount is your fair value less cost to sale and value in use. So what is your fair value less cost to sale? uh, Value in use is determined. Okay, so I'll explain it in a simpler way. So what we studied was, yeah, so let's think like in the financial sheet, your asset is valued at 50,000. Now if you go and try and sell it into market, we determine that the fair value is 40,000. And we have to incur some cost also to sell it. Maybe we have to promote it, or maybe you have to transport that machine somewhere. So let's say take 2,000 as a cost to sale. So your fair value less cost to sale will be 38,000. So that is your fair value less cost to sale. And what is value in use? So value in use is pretty simple. Let's say by using an machinery, every year I'm going to gain 20,000, not 20,000, 2,000 for the next, let's say for the next 10 years. I'm going to earn a profit of 2,000 if I use this machine. So that is the present. So that is the cash flow which we are going to receive from using that asset. That is 2,000 for 10 years is 20,000. So that is the value in use. So which is higher of 28,000 or 20,000? Obviously 38,000. So in our balance sheet we have to recognize this asset at 38,000 and not 50,000. So that's what it states over here too. Okay, let's solve this example. So the following information relates to three assets. The carrying amount is 100, NRV is this, and value in use is this. What is the recoverable amount of each asset? This is very simple. We just have to recognize which is the higher of. Okay. So which is higher of, NRV or value in use? Value in use is higher. Now, which is higher, 125 or 130? Obviously 130 is higher. 100 or 90? 100 is higher. So this is our recoverable amount. This is what we'll get if we go and try to sell this machine in the market right now. So, and okay, they have also said that calculate the impairment loss for each three assets. So for the first machine, there's no loss because we have a carrying amount of 100 and the value in use is 120. So we have a revaluation surplus. For the second asset, the carrying amount is 150, but the recoverable amount we have is 130. So 150 minus 130 is 20,000. And for the third one, the carrying amount is 120. We have 100. Again, that is 20,000. Okay. Indicators of impairment. IAS 36 requires that at each reporting date, an entity must assess whether there are indicators of impairment. So I guess we discussed this earlier also, that if we use that revaluation model for our assets, it's compulsory, to assess at each reporting date that is there any indicators that there has been an impairment for our asset. So there are two types of indicators: the external indicators and internal indicators. So let's try and understand both of them. So the external sources of information or the external indicators are market value of the asset has declined more than expected. So whenever you see a new iPhone was launched, like I don't know which was the latest one launched, it was the orange one, I don't remember the model number. So before that, whichever iPhone, let's say iPhone 10, when that was released, iPhone X or iPhone 10, the value was high. I guess people, it was around something. I don't remember. So, okay, so wrong example. So let's say, um, whenever a new iPhone model is launched, the value for the one which was launched before it always depreciates. Okay, that's because people will choose a newer model, right? Who will choose the older model? That's why the market value of the asset also declines. So that is an indicator of impairment. Changes in the technological, market, economic, or legal environment have led to an adverse effect of the entity. Maybe there are there's some improvement. Computers which were like in trend 20 years ago are not so much, not at all in trend right now because of technological development. That's also an indicator. Interest rates have increased, thus increasing the discount rate used in calculating the assets value in use. So when we find the present value of our future cash flows, um, when we calculate the present value of the future cash flows, and that the discount factor we use for calculating also increases, because of that is influenced by the interest rate. So if the interest rate increases, the discount rate which we use also increases, thus impairing our asset. Okay, so let's now discuss the internal sources of information for our impairment. So the evidence of obsolescence or damage to the asset. Obviously, if there has been any external or internal damage to the asset and it doesn't function like before, that's an indicator of impairment. Changes in the way that the asset is used have occurred or are imminent. First you used to use that machinery for everything, but right now you have different machineries for different parts of a process. So that also is an indicator. Economic performance of an asset is or as of an asset is anticipated to be worse than expected. So you are expecting in future this asset is not going to be in use like you are using it right now. So that is also an indicator. If an indicator of impairment exists, then an impairment review must be performed. This is compulsory, so remember this, highlight it. So when there is no indication of impairment, then no further action need to be taken. An exception to the rule is goodwill acquired in a business combination, an intangible asset with an indefinite useful life, an intangible asset not yet available for use. IAS 36 requires annual impairment reviews for these assets irrespective of whether there is an indication of impairment. So for those assets, it's okay if you don't review it annually, but for these three assets it is compulsory that you even if there is no indicator of impairment, you need to check it for impairment. So recognition and measurement of an impairment. When there is an indication of impairment, an impairment review should be carried out. So that's obvious. There is an indication of impairment, you need to carry out an impairment review. So the recoverable amount should be calculated. The recoverable amount is higher of fair value less cost to sale, or your what do you say, क्या बोलते हैं, carrying amount नहीं, क्या बोलते हैं, क्या बोलते थे दूसरे वाले को, हाँ, measurement of value in use. So it should be higher of value in use or your fair value less cost of sale. The asset should be written down to the recoverable amount, and the impairment loss should be immediately recognized in the statement of profit or loss. So the method is very simple. You find out the recoverable amount. So let's say the recoverable amount is 80 for an asset that is recognized at 100 in the financial statement. So your 20 rupees loss will be recognized in the P&L. It's very simple. In the case that impairment will be taken first is the revaluation surplus, and so is disclosure other comprehensive income until the revaluation gain is fully exhausted. Then any excess is taken to the statement of profit or loss. In the case that the asset already has the revaluation surplus in the OCI, so let's say an asset is valued at 100. In the OCI, you already have a revaluation surplus of 50, and the asset has been impaired by 60 rupees. Impairment is of 60 rupees. So first you will cancel, you will write down this 50 rupees from your OCI. You will delete this 50 rupees, and the remaining 10 rupees which you have will be in the P&L in the loss section, and the asset is at 40 rupees now. So let's solve test your understanding 1. An entity owns a car that was involved in an accident, and at the year end it is barely usable, so the value in use is estimated at $1,000. However, the car is a classic and there is a demand for the parts. The result in a fair value less cost of sale of 3,000. So it's very easy. The numbers are already given to us. So the recoverable amount is 3,000 because it is the higher of value in use and fair value less cost of sale. Now the opening carrying amount was 8,000 and the car was estimated to have a life of 8 years. So our annual depreciation is $1,000 from the start of the year. So the car was still year end, that means we have completed 1 year. So that gives us, after depreciation, our carrying amount is 7,000. Our fair value less cost of sale is 3,000, that is a recoverable amount. So after impairment, this is our impairment, okay? Nahin. Sorry. This is our amount which we need to get after impairment. So we have an impairment of 4,000. We need to get 3,000. That's why we are going to impair it by 4,000. Okay, let me just check. Now even I am confused. Sorry guys. Yes, that impairment is our balancing figure, and that's why it is 4,000. Okay, so let's see the reversal of an impairment loss. The calculation of impairment losses is based on predictions or what may happen in the future. Sometimes actual events turn out to be better than predicted. If this happens, the recoverable amount is recalculated and the previous write-down is reversed. So, impairment is done by hoping, there are going to be bad situations coming up, the economy is not going to perform well or something like that. So that's why we impair an asset. But sometimes it doesn't happen. So we can recalculate the previous write-down. So impaired assets should be reviewed at each reporting date to see whether there are indicators that the impairment has reversed. So this is very simple. You need to check it year after year to see if there has been an indicator that the impairment can be reversed. A reversal of an impairment loss is recognized immediately as income in profit and loss. So the reversal is recognized in your profit and loss in the profit section. If the original impairment was charged against the revaluation surplus, it is recognized as the comprehensive income and credited to the revaluation surplus. So पहले अगर OCI में से जो 50 रुपये थे हमारे, now we are going to not delete that 50 rupees. We are again going to put it in a revaluation surplus. The reversal must not take the value of the asset above its depreciated historical cost, that is the amount it would have been if the original impairment had never been recorded. The depreciation that would have been charged in the meantime must be taken into account. So again, let's see this with an example from this sum only. So let's say asset was 8,000 at the start of the year. At the end of the year, we need to charge depreciation of 1,000 every year, right, as given in the sum. Now at the year end, we got the value of the asset as 3,000 because of the impairment. Now we have found out that the impairment should be reversed after the second year. So let's say this happened in 2011 start, we had 8,000. At 2011 end, we have 3,000. Now in 2012 end, we have seen कि मतलब ये इम्पेयरमेंट वापस हमें रिवर्स करना है. सो हाउ मच कैन वी रिवर्स इट? नाउ आफ्टर 2011 एंड में अगर इम्पेयरमेंट नहीं हुआ था तो हमारा वैल्यू होता 7,000. तो अभी 2012 में एक साल का वापस डेप्रिसिएशन चार्ज करना पड़ेगा, जिसकी वजह से हमारा वैल्यू हो जाएगा 6,000. तो 6,000 के ऊपर हम इम्पेयरमेंट को रिवर्स नहीं कर सकते. भले ही हमने 4,000 का इम्पेयरमेंट चार्ज किया हुआ है, पर हम लोग 3,000 जितना ही वापस रिवर्स कर सकते हैं. 4,000 नहीं कर सकते क्योंकि हमें डेप्रिसिएशन चार्ज करना पड़ता है. If you so depreciation charge for the future period should be revised to reflect the changed carrying amount. An impairment loss recognized for goodwill cannot be reversed in a subsequent period. The reason for this is that once purchased goodwill has become impaired, any subsequent increase in its recoverable amount is likely to be an increase in internally generated goodwill, rather than a reverse of the impairment loss recognized in the original purchased goodwill. Internally generated goodwill cannot be recognized. So let's say you have purchased goodwill from someone else, and you had it impaired, but right now you want to reverse that impairment because you have again built your brand strongly. You have done work to restore the name of the brand. So but you cannot reverse that impairment because that is internally generated. जो भी काम किया वो अपने अंदर से किया है. So that is internally generated goodwill and that cannot be recognized. So indicators of impairment reversal. What we studied earlier was the indicators of impairment. Now we are going to study the indicators of impairment reversal. So the external indicators of an impairment reversal are increase in the assets market value, favorable changes in the technological market, economic or legal environment, decrease in interest rate. Internal indicators of an impairment reversal are favorable changes in the use of the asset, improvement in the asset's economic performance. So now let's talk about cash generating units. So when assessing the impairment of assets, it will not always be possible to base the impairment review on individual assets. So an entity has n number of smaller machineries. You have lots of smaller machineries in a production process. So it's not possible to individually identify them and to check the impairment. So all of these small assets are grouped together in one as one generating unit, one unit which we call as cash generating units. So the value in use calculation may be possible on a single asset because the individual does not generate distinguishable cash flows. So single-handedly, individually these assets cannot these assets cannot book profit. When all of these assets work together, then only they can be called as they can book profit. So in this case, the impairment calculation should be based on the CGU. So there is no major difference over here. It's just that these small assets make one unit which is capable of producing or doing something. So that's why we call them as CGU. So a CGU is defined as the smallest identifiable group of assets that generates cash flow that are largely independent of the cash inflows from other assets. So yeah, now how do we calculate the impairment? So the impairment is calculated assuming that the cash generating unit is one asset and comparing the amount of the CGU to the recoverable amount. So it's very simple, it's very basic, it's the same thing. We again find out the high recoverable amount, which is the higher of your value in use, and if which fair value less cost to sale, and then we compare it to the carrying amount and then we impair it. It's the same method. As previously, an impairment exists where the carrying amount exceeds the recoverable amount. So impairment of a CGU, deal with any specifically impaired asset first, then impair the CGU. IAS 36 requires that impairment loss attributable to a CGU should be allocated to write down the assets in the following order. So I will suggest first we solve a sum. Okay, let me just explain it to you. So when we impair and CGU, first we have to cancel out it by the goodwill thing. We have to cancel out the whole goodwill. Let's see over here we have goodwill of 20 million. So we first of all write down the whole goodwill to 0. We'll make it to 0. Goodwill सबसे पहले चीज़ चली जाएगी. And the other assets including then we have to compare all the other assets, which is the technology, brands, lands and buildings, by using the pro rata basis. No individual assets should be written down below its recoverable amount. This means that unless specifically impaired, current assets are unlikely to be impaired as part of CGU, as they are already likely to carry at their recoverable amounts. Inventory, as noted about, is outside the scope of IAS 36. So we can write down all of these assets, technology, brands, lands and buildings, everything, till we reach the recoverable amount, उससे नीचे नहीं कर सकते. But your current assets, that we cannot write down because that is already at its lowest value. Your inventory is you already recognize that it are the lower value. The receivables and everything, they are already at their lowest value, so we cannot impair your current assets. So I'll suggest I'll try to solve a small sum. Okay, let's solve that test understanding 3 only. 1 second. Okay, I'll quickly explain how to solve test understanding 3, and you guys can solve the rest of the sums and let me know in the comments. So STEPCO runs a unit that suffers a massive drop in the income due to the failure of its technology on 1st January 2018. 1 second. And the following carrying amount were recorded in the books immediately prior to the impairment. You have your goodwill, technology, brands, land, building, other net assets. So, the recoverable value of the unit is estimated at 85 million. So right now the carrying amount is 20. Let's calculate the carrying amount. We have 20 plus 5 plus 10 plus 50 plus 30 plus 40. So right now our carrying amount for the asset is 155 million, but they are now telling us that the recoverable amount is 85 million. We don't have to calculate the recoverable amount, it is given to us. The technology is worthless. तो टेक्नोलॉजी तो काम का ही नहीं है, इसको तो हम लोग पूरा हटा ही सकते हैं along with goodwill. The other net assets included in inventory and receivables, it is considered that the carrying amount of other net assets is a reasonable representation of the net realizable value. So, in other words, they are telling us that the other net assets are your current assets. They cannot be written down below their net realizable value. So, we have to show the impact on 1st January 2018. It's an easy sum, very simple. Okay, so the carrying amount is given to us 155 million. We know that the recoverable amount is 85 million. तो हमें इम्पेयरमेंट कितना एलोकेट करना है, 70 मिलियन का एलोकेट करना है. अभी 70 मिलियन में से 5 मिलियन तो निकल ही गया अपने टेक्नोलॉजी की वर्थ प्लस, कोई कीमत नहीं आने वाली, तो टेक्नोलॉजी हटा दिया तो अपना कितना बचता है, 65 मिलियन का इम्पेयरमेंट बचता है. अभी 65 मिलियन में से हम लोग 20 मिलियन भी निकाल देंगे क्योंकि गुडविल भी हम नहीं, गुडविल भी ज़ीरो कर देते हैं. दैट्स अ रूल. आपको कभी भी CGU का इम्पेयरमेंट करना हो तो you bring the goodwill to 0. So after removing goodwill also we have the remaining impairment of 45 million. So how do we allocate it to the rest of the assets, that is your technology, brands, land and building? It's very easy. We have to allocate it on pro rata basis. So how we do that is the formula of 45 million, that is your impairment. You 45 million into 1 second guys, just got a message. Okay, so the 45 million, what you do is into 10, like मतलब देखो अभी हम लोग को पहले ब्रांड्स का चालू करना है, ठीक है. पहले ब्रांड्स का हम लोग कैलकुलेट करते हैं कितना हमारा इम्पेयरमेंट है. तो 45 मिलियन अभी कितनी करेंट वैल्यू है, 10 डिवाइड बाई वी व्हाट वी डू इज वी ऐड 10 द ब्रांड का वैल्यू, लैंड का वैल्यू 50, बिल्डिंग का वैल्यू 30. वी ऐड ऑल ऑफ दीज वैल्यूज़ जिसको हम लोग इम्पेयर करने वाले, ये 3 चीज़ हमें इम्पेयर करनी है, तो हम ये तीनों चीज़ का वैल्यू ऐड करेंगे. दैट इज़ 50, 30, 80, 90. So अरे 45 into 10 upon 80 we get that as 5. इसका भी सेम, इसका हम लोग 50 ले लेंगे 10 की जगह पे बिकॉज इसकी वैल्यू अभी करेंटली 50 है. तो ऐसे कर करके वी फाइंड आउट द इम्पेयरमेंट और फिर से इम्पेयरमेंट निकाला एंड देखो अभी जिससे ना विल गाली द फाइनल अमाउंट. जैसे अभी 20 गुडविल का तो पूरा हटा ही दो, 0 हो गया. 10 हमने इम्पेयरमेंट ढूंढा 5 मिलियन तो हमारा बचा 5 मिलियन. 50 का करंट वैल्यू 25 इम्पेयरमेंट तो बचा कितना 25. 30 इम्पेयरमेंट 15 का बचा 15. अभी अदर नेट एसेट्स है उसको हम लोग नहीं टच करते, वो जैसा है वैसा रहने दो क्योंकि वो नेट रियलाइजेबल वैल्यू पे है. सो हमारा टोटल ये सब हमारी इम्पेयर्ड वैल्यू आ गई, ये अभी हमारी इम्पेयर्ड वैल्यू है और 85 हो गया हमारा रिकवरेबल अमाउंट. दैट्स इट गाइज, दैट्स इट फॉर द सम. If you guys should try and solve the other sums. I don't have the time right now to solve the big one, but if you guys want me to, just drop it down in the comment sections and I'll make a separate video short on it. And thank you so much for watching. If you found this video useful, please share it with your friends, and yeah, please like, share and subscribe to my channel.